Is this the biggest contrarian signal ever? Because I've gone bullish, and even though we're going to see a lot of people flooding into the markets, there's some risk coming up you need to be aware of. There's a major pitfall that a lot of investors can't see coming. Let's turn to Goldman, where we picked today's story up. They've got this incredible chart here because they say equities typically rise when the Fed resumes cutting. And that's true. And the reason you see stocks go up is because everybody thinks that rate cuts have this instantaneous effect on the economy. We've been keyed to believe that the only thing holding us back right now is just another 1/4 or 0.5% rate cut. And this means people are going to buy and front run the Fed's move. Now, the problem is we know the magic of monetary policy doesn't have such effects, but let's look at what Goldman's saying here because there's some major risks in the months to come. And they have this great chart that they published this week about the S&P 500 return around the first Fed rate cut being bullish, and it is for about 3 months. See this light blue line? This is what happens to the median stock price when the economy continues to grow. But you see this gray line down here? This is what happens when the economy enters recession. So what you see is people are very bullish. They buy in and they think that rate cuts are going to have some magical effect on the economy and the markets. They think it's money printing, and you're going to hear this in the news. And then what happens is all of a sudden the trajectory of the economy continues to slide, and then stocks go right along with it. So what this is telling us is you've got about a 3-month window, and Goldman's data is pretty clear about this. There's about a 3% upside to the market here, and that's still enough to get people to buy, because if for some reason the rate cuts work and the market was to turn around, people don't want to miss out. Now, there's certain sectors that are really poised to jump on this. I'm going to show you what they are, but let's talk about some of the risks here. And right now, it's pointing to the lowest market breadth and the largest market concentration, meaning more investors are crammed into a smaller number of stocks than ever in history. And again, if for any reason the AI bubble was to burst, well, watch out. You're going to see the markets come crumbling down. And this is perhaps why Bank of America is noting that all of a sudden there was a record $97 billion inflow into global bonds over the last 4 weeks. And what you're seeing is a lot of big institutional investors are starting to position around a Fed rate cut. They know when the Fed cuts that other central banks are going to continue to cut. Again, this is not a bullish thing for the economy. Remember, anytime the Fed resumes a rate cut, it means we're headed into a recession. And again, the biggest benefactor is going to be the bond market. But something I've been warning about very clearly is market breadth. Let's turn to the S&P 500 here, because this is what I want you to see. We've been talking about this, but look at what happened this last couple weeks. We've seen breadth push higher. Now, 72% of the S&P 500 is trading above its 50-day moving average. That's a very bullish signal. And look what happened. Price went right up along with it. So from the S&P standpoint, if you're looking to trade that, well, right now, everything says you should. Let's take a deeper look, because what we can see is momentum is positive. And how do we know that? The relative strength indicator, it's above 40. We see it on a technical basis right now. It's at 63. The MACD, very hard to trade this based on its own data alone because it flip-flops all the time. Right now it's got a negative cross, but I think that's likely going to turn higher here pretty soon. Now, our own Momentum Timer Pro, we take all these technical indicators and we pair it with the trend. So if you like trading technical indicators but you struggle, you're getting late, getting out early, or all over the place, you should really check out our Momentum Timer Pro report, because what did we see? It had a bunch of buy signals, had one little sell signal here, and back into the buy mode. And we can look back over the last 1 and 3 months, and we see that momentum is very strong. Again, this is a bullish indicator. Now, how about our machine positioning? It's saying the machines are going to go into a max long mode. Now, we've talked about this the last couple of weeks, that the risk was if stocks come down, machines were going to sell, and in a big way. But right now, there's really no indication of that, because when we look at a price chart, what do we see in the S&P is we see nothing but breakout city here as more investors look to cram into, of course, the S&P and other indices. But there's some risks here, and there's a lot of them. But if you're looking to get an edge on the markets, well, one thing you should be taking a look at, that is our new Metre strategy. This is an advanced trading system that combines 9 professional trading strategies into a single intelligent signal generator, providing 31 times more frequent buy signals. Now, it has multi-strategy consensus, but it's optimized for swing trading. It's got a target hold period of 2 to 15 days. We generate over 155 signals per year, and it has a success rate of 55%. Now, if you think that might be low, it's way better than those other strategies all on their own. It's all designed for fast profit taking. Now, right now, it's included in any of our reports at no additional charge. You want to trade momentum, you want to trade machine positioning, grab those links in the description below. Use the coupon code for your free 30-day trial. Because remember, I've been warning about breadth. I've been warning about it. And you say, well, wait a minute. On the S&P 500, Steve, it looks really good. But hold tight. Let's look at the Nasdaq here, because remember, a lot of people are buying this AI thing. They think it's going to be something great if it bursts. And breadth right now is telling us that that is the biggest risk we face. Because the S&P has got about 72% above its 50-day moving average. But how about the Nasdaq? Only 58% of tech stocks trading above it. And again, what you're seeing here is breadth has pushed back to this recent high, but price has not. Again, this is a major warning sign that perhaps there's a rotation of big investors out of tech stocks, handing the ball over to a lot of retail investors. And there's further evidence of this. Let's take a look at futures positioning here. Asset managers and hedge funds are deeply long. So if you're looking for a rally in tech, what you're seeing in breadth is not a very good sign here. Let's take a look at the price chart, because what do we see from a momentum perspective? RSI is at 56, a little bit different picture than the S&P. Negative cross on the MACD, no big deal here. But what do we see? Machine positioning on our screens is backed off a little bit. Now, if you see, of course, the Nasdaq push higher here, you could see the machines go max long on tech. But right now, we're really not seeing any indication of that. But one thing that is bullish, it did hold its 6-month volume profile. So we'll see here if all these corporate share buybacks can transmit into pushing the Nasdaq higher. So far, breadth says not a chance. But let's take a look at the Russell 2000, because if you're looking to allocate some money and you really want to focus on the U.S., well, you should be really looking at the Russell 2000. And I'm going to make one of perhaps the most bullish cases you've ever seen on this show. And right now, 74% of the Russell's trading above its 50-day moving average, and it was really a big benefactor of Friday's talk by Fed Chair Powell, suggesting there could be a rate cut. And all of a sudden, we saw the Russell take off. In fact, that was even bullish enough for it to put a signal to our subscribers out for Monday's open. I'll show you that in a moment. But why are we so bullish about the Russell 2000? Take a look at this chart. And what you can see is asset managers and hedge funds, well, they're actually short the Russell, meaning if price continues to push up, they're going to have to cut out of those positions, or they're going to face just a beating on them. They're going to end up turning long here if you see price go up. And again, that could be the bullish catalyst to send small caps higher. Now, what do we see? Momentum very positive here. RSI is at 67. MACD's got a positive cross. The trend is up. Our Momentum Timer Pro is saying, look, momentum is pushing up. Our machine positioning is saying, look, there's going to be buying here. And that has triggered a buy open to our Momentum Timer Pro subscribers on the 25th. Now, if you're looking to trade these momentum signals and you're using these other systems and they're not working for you as well as you think they could, again, jump into our program, grab into that, because you also get those meta strategy trades. And right now, I'm working on an optimization engine that's going to take all of those strategies and make them even better. So you don't want to miss out on this. But for right now, you can get in on all of this at no additional charge, and you get a 30-day free trial. But right now, we're celebrating something big. And this is how I feel when our subscribers make money. And we told them to buy DBA. And we've been talking about this on the show now for a little bit. Remember, we said buy it open on the 7th. Our Momentum Timer Pro subscribers up almost 6%. Our machine positioning subscribers, that's the CTA Timer Pro, up 4.5%. And we nailed this trade. We saw the turn of momentum. We saw the turn of machine positioning. Let's take a look at this from a price chart perspective. But I forgot to talk about the Russell. So let's go back here and talk about the Russell 2000, because it's broke out of a supply zone here. Now, this is important. Let's zoom out to the 2-year chart. And what this is suggesting is all these people that were selling the Russell here and selling the Russell here that are short are going to get squeezed. And remember, those asset managers, they're going to be playing chase here. Could be the catalyst but sends the Russell 2000 all the way to new all-time highs. But let's talk about DBA here because this thing's breaking out too. We noted back here, if we told our subscribers to buy right down here, and what happened? It's gapped up and taken off and looking to get back up here to its 1 year or 2 year high, that is, and that is again very bullish. Of course, we're raising our stop losses right along the way, and this is one of the big differences that we do compared to a lot of other trading systems. We give our subscribers risk control levels and we update them right along the way. But in addition to Russell 2000 and ag commodities, I'll tell you what else I'm bullish about. It's the energy sector. Now, full disclosure, I've got a small position in Explorers here, but right now, what do we see? Big energy. This is XLE. We now flag a buy it open to our Momentum Timer Pro subscribers. This is from Monday. Again, we're giving you a lot of trading advice today. And why do we see this? Well, Momentum is coming off a sell max position on our 1 month window. That's very bullish. At the same time, you know, machine positioning. This is our fast algorithm. This is our slow algorithm. You can see they're not at 100%. Now, the big difference is when we look at machine positioning, we run a historical overlay. Now, most machines look back around 6 months, maybe a year, and they adjust their position, but we look at it over their history so we can see when we think they're off size, giving us an edge to get in before they buy. Now, let's take a look at the chart here of XLE, show you why I am bullish on this. Even though my current position is down just a little bit, I think this thing could go vertical here. Now, what happened? It pulled down here below a 6 month volume profile. There were a lot of sellers, but notably buyers were just quietly stepping in this whole time. It moved above his 6 month volume profile. It closed above his 200-day moving average. And now if it can pull a short squeeze here from all these people that were selling down here, well, what I think is going to happen is it could shoot up here into the $93 to $94 range. And all it's got to do right now is break through that 1 year volume profile. So again, what I see, pretty bullish setup here for energy. So again, we look at the broad sectors. You could be chasing the S&P here. I don't think that's the best place, but pretty good trade setup there. Nasdaq, I'd probably pass on. Russell 2000 looking great. You see ag commodities, you missed that one, but maybe not too late. Energy sector looking pretty bullish, but what do we have next? How about the financial sector? Now, I want to understand something here because a lot of people think that rate cuts are bullish for banks. But they're not. It's just the opposite. Because if rate cuts don't transmit into new lending, which typically doesn't happen when the economy slows and people are in delinquency, it's going to be short-lived. But let's take a look anyways, because what do we see? Momentum is positive. Machine positioning, we're seeing some buying here. We're seeing that flip-flop and momentum now turn to buy, and for a good reason, because, well, price is starting to break out. Let's take a look at XLF, and what do we see? New all-time highs. Let's zoom out to the 2 year chart, and you can see this thing is bullish, bullish, bullish. That is until a recession hits. So keep in mind, there's a reason I wanted you to see that there's this 3 month window that you could chase the markets, because if you're looking to chase here, all you got to do is just manage your risk, and it's one of the most important things. Whether you're trading or whether you're managing, your entire wealth, you have to manage your risk. And right now, think about this from a 3 months perspective. Let's take a look at emerging markets here. We got stopped out of this trade. Let's take a look at a chart here because we haven't put a buy signal back on this. I'm not sure we're going to see one, but let's take a quick look at EEM. New all-time highs here. Let's zoom out. No, not all-time highs. We'll just say over the last 2 years. How about the last 5 years? Not there yet. But what's going to key here to help EEM is you've got to have a dollar that continues to go down. And I'm not sure that's the case. Now, the market is well positioned for that, but I'm not sure that's what's going to happen. We'll talk about the dollar here in a little bit. But last week, I gave you a great trade setup in the healthcare sector. I said, look, you got to look at XLV. It was our meta strategy trade of the week, and now that trade up 1.2%. Again, it went on the 8th, and it was so easy. We give you the trades. We tell you where to put your stop loss levels at, and we raise your stops. We tell you what to do all along the way. It's just that easy, my friends. Let's talk about the bond market, because what Bank of America notes is there's a ton of money flooding into bonds on the hopes that the Fed is going to cut in September. And once they do, well, if we go into recession, they're going to cut a lot more. What do we see? Machine positioning well off that 100% mark, so we could see a flip here. Momentum coming off a buy minimum. Not a super bullish indicator. I think this is going to show up on our reports here pretty quick, but let's take a look at TLT and see what's going on. Now, as we zoom into the 6-month window, we can see price held its 6-month volume profile. It's currently fighting against a downward trending 100-day moving average. You see that in blue. If this does pull back and hold that 6-month volume profile, that would be a very bullish indicator. You can see the MACDs trying to bottom out and turn up. You can see the RSI is just kind of pulling back and now turning higher here. So again, a pullback in the 6-month volume profile would be a bullish indicator. You see, I drew these channels in. What you'd be having a target up here, somewhere around a $90 would be the top end of that channel, with a hope that it breaks out up into the low 90s. And if you get an all-out Fed cutting, well, watch out. I think zero is the next path. Let's talk about something else that turned bullish all of a sudden. That is gold. Momentum turned back positive after a string of sell signals. You see machine positioning even backed off here, but a lot of investors are going to see gold as a very bullish play here on Fed rate cuts. In fact, what you could actually just assume here is that pretty much everything is bullish right now. You know, when the Fed cuts, everyone's like, you just buy anything and everything. But that's why I started the show with that Goldman report. I wanted you to see it. You got about a 3-month window. And that's just the average. It may be less, it may be a little longer, but those are the risks we're facing. And how about gold right now holding that 6-month volume profile? The risk here is you've got 1, 2, 3, 4 tops. Well, that means if you're going to be buying gold here as a trade, not to hold, as a trade, keep a target up here about 317. Raise your stop loss levels along the way. But some trade we did nail, and in a big way. Well, that was Goldman. Here you can see again, I'm excited. Love it anytime our subscribers are making money. And how about this trade on the 21st? We told them this was a meta strategy trade that you could have gotten in on, but you didn't sign up. So you got to sign up and get these reports. Momentum Time Pro, CTA subscribers, they're both up 3.46% on this trade. This is incredible. I left the stop loss level off. That was a mistake on my end. But let's take a look at the chart here, because again, if you see gold go up and you see the markets go up, that means GDX is likely to go right alongside. Again, we told them to buy on the 21st. We've got to zoom out to the weekly chart here to tell us that we think the next target is going to be up here near these highs. You see up here that dotted green line? Well, that's the zone 63.15. It gets up there. You definitely want to tighten up your stop losses for sure. Let's continue on, because we've got a little bit more for you, and that is the dollar. And everyone thinks the dollar is dead on Fed rate cuts, but here's what you need to know. If we go into a recession or a slowdown, people are going to demand the dollar. And keep in mind, what's backing, of course, the dollar is you see all of these new tokens, you know, these crypto, stable coins. They're backed by treasuries or dollars. There's going to be a demand for this. Right now, everyone thinks it's dead. It's not. Even the price chart doesn't suggest that. But from a tactical perspective, well, you see one daily sell signal should say negative, not positive. RSI is at 47. MACD's got a negative cross. Even machines aren't excited about this. Nobody wants to own the dollar. Well, maybe except me, because I'm short the euro. That is a long dollar play. Got a little few positions. Those hasn't played out, but I'm going to be looking at putting some trades on this next week. But let's pull up the dollar if I can find it. And there it is. And what happened? Big drop on Friday. But what is bullish about this? It came down and held this 50-day moving average. A little green line there, that's a 50-day. Remember, above that, it's considered bullish, and it's come down and dropped there and held it. If it holds that, comes back up and gets through that 6-month volume profile, that again is a bullish indicator. You could see this thing rally all the way up to its 200-day. That would be, of course, an unwind for emerging markets. Again, you talk about why I'm not too excited about EEM, and that is one of the cases here. But again, right now, things are looking very bullish in the market. Look at the S&P. Look at, don't look at the Nasdaq, because right now that's not the place. I think the Russell 2000 could be a big win. Energy sector, at commodities were there. Bonds, maybe not yet, but you want to just start looking at building positions there on the notion the Fed will cut next month. So you can see a lot of opportunities here in the market. And again, this is what we do this every Sunday to help you make more money trading and investing. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.